Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So, interesting day. The last few days have been pretty interesting. We've been talking about some of the under the hood weakness, trying to figure out if it would just translate into broader indice downward movement. And, it hasn't been easy. I know some guys who've been, kind of short the spiders, trying to have it play catch up to the weaker sectors that have been breaking lower, like the small caps or like the oil names, et cetera, et cetera. So what happened today is finally, if you recall, the last few sessions we were targeting the XLE, for a laggard descending trendline break to the upside. In yesterday's recap, I explained why I sold it yesterday, because of the negative candle and because my thoughts changed. So let's just first get into that, because everyone's like, Red Dog, what made you sell? What made you sell? You were targeting it. I thought you liked it. You're fickle. Whatever words you want to say, et cetera, et cetera. All I know is that I posted a chart on Twitter, and right here, this looked good. This looked like, hey, the market might hang in there. Maybe this clears this descending trend line. Maybe you could be in tier 1, then tier 2, and then high 5 there. Maybe. Those are all maybes. Okay, maybe. You could, you have a double bottom here, and then what happened yesterday? That candle doesn't mean a lot to a lot of people. It doesn't. To technicians, it means something. To me, it meant, I was wrong. I was anticipating a move above this flag pattern to break a descending trend line to get up to the 50-day or more if the market stayed strong. Instead, it reversed. So what did Red Dog do? He sent out a tweet saying, sorry guys, I'm taking a loss, but I'll revisit it. And then this is what happened today. So does yesterday's loss feel, was it feel bad yesterday? I didn't feel great, but is it much better than today? Is it much better than me not responding to questions on Twitter, not or even to myself saying, okay, I said on Twitter it might break out, it didn't, let me just close my eyes and hope and pray, and bought here and bought here and bought here, and then all of a sudden, now I'm thinking I have quadruple the size of the position, quadruple it, whatever that thing is, loss. Instead, I said, trade kind of changed. I'm out of it. I'm going to wait and see. So that, my friends, is something you have to do as a prop trader. You're going to be long. You're going to be wrong, and you're going to be wrong pretty often. So you have to admit when you're wrong, move away, and then when you're right, you have to press the envelope and make a lot more money in your winning trades versus your losing trades. But the key is taking accountability to yourself. So right there, you go back to the chart. You look here. That's the 200-day. That's a pretty negative sign, and it's very negative that it broke that. Oil, which has been very choppy, also, broke below a key channel. So that, too, is very negative. So what else did Red Dog say we have to watch over the next few sessions? We had to watch whether or not the small caps that had a very, faulty breakout or a breakout that had a lack of power, maybe it breaks the 50-day. So, IWM, look what it did here. Okay, IWM. Remember, I was long it. Another time I was long it and wrong. I was long it into this day, thinking, hey, look at that. Long channel, broke to the upside, came in, was buying it for continuation to the upside. And then if it was going to continue, it should have held, in my opinion, 139.52. What did it do? Broke 139.52. I said, hey, I thought it can go sideways and break out the highs. That's the trade that I want. Didn't happen. Get out of the way. Some guys on the VTF, when they see me sell something and figure out it's not going up, they short it. If you shorted it, congratulations. And now PS, here you are below the 50-day moving average, below the 8 and 21-day moving average. That means momentum has left. Maybe it leaves for a few days or weeks or months, who knows. But, here you're above the 8 and 21-day. Here you're hugging it, back above it. Little trade here. Now you're back below it. That means it's vulnerable. That means you have to be careful. Here's your next big level underneath it, and there's your 200-day. So for the spiders, I am short a little spiders overnight. Here was that exhaustion gap up, okay, on what's it called, President Trump's address to joint conference, with a Congress, I'm sorry. There was your next day that, actually was weaker than how this looked. That got me out of most of my swing trades. That's when I said I'm going back from, I think, portfolio to tactical just to be safe. And now here's where we are, below the 8-day. Something different, right? Is it something different? Why is Red Dog, why is it something different? Because here you're above it, here you break out, and now you're hugging it the entire time, and now it's below it. So does that mean it's a bear market? Does it mean we're going to see the 200-day? Does it mean it's going to crash? It means no, we've lost some speed, some momentum. If the Energy stocks are below the 200-day and the Russell's below the 50-day. Why can't we maybe see at least the 21-day, which would actually be healthy? So that's why some of us are short this for a trade. Plus, this morning I talked about the banks. I said, hey, Tepper loves the banks or likes the banks. You had a strong ADP. You know what, look at the action, because if it doesn't hold that gap up, it means it's kind of priced in. So even if they do raise in March, doesn't mean the banks have to go up because they've been going up for a long time. And then look at the candlestick in the banks. Wow, what does this look like? Another engulfing bar, another lower high. Remember on this candle I said take caution. Why take caution? Because you had a gap up, didn't hold the gap, go sideways and continue. It actually got into the gap, closed on the lows, hit the 8-day, bounced the first time, and now it's below the 8-day. So why not see at least the 21-day? Okay, this was your last breakout move in the banks. This is an ugly candle. This candle says, look out, take notice. And then it's got to stay below the halfway mark in order to continue down. Okay, why? Because if it stays below the halfway mark like it did here, it shows you there's no appetite for risk on the dip. So we'll see what is next here. A little down open would be nice. I'm sure a lot of these banks look the same. In my morning note, I talked about this level. It's not broken yet, but this is looking a little vulnerable here. Opened up, came lower. JP Morgan also pretty nasty reversal. In the scheme of things, if you're long JP Morgan from here, it doesn't really matter. If you're long JP Morgan from here, it doesn't matter that much. But if you're trading it actively, this day right here, was a little day to take notice. Now you retested that, closed in the lows. So maybe this also sees, a little bit of lower prices. You did have some decent action in tech still hanging around. I have to, end this a little early. I'm sorry. Apple, it's hugging on to that 8-day. I'd be a little careful. I'm not long Apple overnight. Nice upper flag, but this does look a tiny bit vulnerable here. If the market wants to correct, it's come a long way, especially since holding after the earnings. So if this were to break the 8-day, maybe it just means we hit the 21-day, which is still fine. But it's been above the 8-day for some time here, so if what happens to break it, means there's a little slight change there. Amazon, what are you doing? You are still hanging around. Amazon and Google actually were strong all day. So we'll see. Tech's still hanging in there. Question is, can tech still hang in there while other things don't? Here's your stop in Amazon. As long as it stays above 841, maybe you try and be long it. Google, I think, looks kind of the same. As long as it stays above, this spot here, there's still momentum. But you got to take care. There's not much power. Facebook, what'd you do today? Facebook, hanging in there, above the 8-day. If you think something's going to change in Facebook, it's got to get below and stay below the 8-day first. It hasn't happened yet. BABA, I still, trade here and there. I lost money today buying strength like a but anyway, it still looks good. It still hasn't gotten above this spot. As long as it stays above this 21-day, I guess, some traders are going to try and be long it and then add to it if it breaks out. Hasn't done that yet. Momo was, the king. Look at the king. Okay, broke above this resistance, stayed above it, which is your momentum rules, and then had follow through. You don't see stuff like that all the time. So if you're in it, congratulations. I'm not in it, but I put it in my note every day, giving you guys my game plan. So if it's on your game plan, it gives you confidence to stay with it. And that is what my morning call is for. The full version is 20 minutes. My note has 20 to 25 names. It's there to show you what I'm thinking on each one of these names. Doesn't mean I necessarily going to be in them. I have to be at Fox. I have to be on China TV. I have to be in meetings. So I pick some things I don't. But it's for you to digest, make into your game plan, and then help you make money. Today, Snap was a really good strategy. Why was it a good strategy? Because it was a plan. I've given you a plan every single day on Snap. What was the plan today? The plan was it opened up flattish above this. You could have been in a long verse this spot, and then there was a day trade to fill the gap. Once it got above this, I actually went to the gym. I was long it. I should have put a buy stop. I didn't. I put an offer to sell some around 22.95 and 23.20, thinking that, hey, maybe it gets to here and fills the gap, and that was a nice little trade. So, it pays to know your levels and have some prep. I am long a little bit overnight. I actually sold into that. I bought some back near the close, and we'll see what happens tomorrow. Just to be in a little bit. I think there might be a bit more upside, but not as much as I had. So tomorrow's another day. We've been in this little stealth correction from S&P 2400 down to like 2365-ish. You could felt today that people were trying to be long, but the market was heavy. We have the ECB tomorrow, so we'll see if that shakes things up. If they taper quickly, we'll see how the European markets react to that, and then we have the jobs on Friday. Hopefully you're navigating this well. If you're not, take a step back, take a deep breath, and just try and take some small steps because that'll lead you to more positive ground. Have a good night.